My voice is clear?
Yes.
Okay, so I'm starting our today's session now. So here, it's a uptrend market condition and it's a momentum. Okay, first of all, it's a momentum. Then what happened? This candlestick and this candlestick. Okay. After that, this one. Okay. So first of all, we have to observe this candlestick first, this one. After that, this one. So when this is a strong move made by the buyer side, now first of all we can check this candlestick. So what's the situation, internal condition of this candlestick? So if we observe here, yes, this is this area. POC is here. That means it's a stop bar. So
Yes.
first of all, this is our confirmation that it's a stop bar. And see the volume color. The volume is by the seller side. So then second confirmation that sellers already entered in the market. Yes, it's okay. Now, when sellers entered in the market, so this sellers volume is high at the stop bar. So when the sellers volume high at the stop bar, so that is the perfect confirmation. So we can place an order here. And this is the inside bar pattern. This is the momentum. This is the uptrend market condition. So S and every confirmation is okay for placing this trade here to the upward direction. So now we can observe this candlestick and this candlestick internal data. Okay, so now this candlestick internal data 16, 17. So this 17 and this is 16. So this 16 and 17 is not so difference here, but it's
Yes.
looking like a stop bar here. And if we take this volume, this is buyer's volume, this is also buyer's volume. So this volume is a push bar and it's looking like a stop bar here. So if we get here POC like not 17 or not 16, at least more than 70, in this type of condition we can again place an order here also in this candlestick to the upward direction. Okay,
Yes.
so when, because this is a Marubozu candlestick and Marubozu after pullback or after retracement, we know that Marubozu candlestick will lead the market to the same direction. Okay,
Yes.
so when we see that type of situation, we can easily place an order. But our POC not like this type of, because it's a very weak volume. This one or this one, although it's like a POC is here, but it's a very low volume. But we need a strong volume here because of this market condition, because of this uptrend situation. Why we can trust this type of volume bar? It's not this type of internal data. It's not a perfect data. So if the data here, it's a very strong data here by the buyer side and POC is here like 70, 80 or 90 volume. So that is a very perfect one. We can easily place an order here to the upward direction. Okay. The second one here. Bullish engulfing pattern.
No, sir. Actually, this is typing mistake. It is
Yes,
outside bar.
outside bar pattern. It's a
Yes.
outside bar pattern, not bullish engulfing. Okay. Or if we take the total situation, that is, we can call it the morning star also. If this 3, then it's the morning star also. But you have taken 2, that's why it's the outside bar. Okay. So what happened in outside bar pattern? Outside bar pattern, this is the 524. Okay. And here 15. Volume, yes, it's okay. This is I think I don't know what type of candlestick formed here. POC level break at the round number next calendar. So a round number level breakout happened, but where the volume high? It's not perfectly visible here. I don't know.
It is here at this area.
Breakout after breakout or below?
Below breakout.
Below breakout. Okay. So if below breakout, then it's little risky. Okay. Why? Because see, this is round number level. Previously, this level sellers area. Number one. Number two is already sellers entered in the market. Number three, buyers try to break this level. It fall down, and it's a inverted hammer candlestick or shooting star type candlestick here, but next candle down. After rejection, next candle down. So breakout, although it's a breakout happen, if the POC is here, high volume here, then we have opportunity. But POC is break, that means breakout point, that means it's a break bar. So if after a breakout, if volume high here, that is also okay. But in this case, it's not perfect one because high volume high at the resistance level. So when market create that type of situation, it's risky. It's little risky. Try to avoid in this type of condition because already sellers entered several times. It's a push, market push down. Sellers push this candlestick down, and basically sellers, what happened? Sellers reduce the buyer's body as well as volume also. That's why next candlestick down. So when after this candlestick market again goes up, this candle volume must high here at this point. Then only we can trust that yes, breakout happened strongly, so market goes up. Otherwise, not. We will not trust this situation. Okay, here bearish outside bar pattern. Yes, it's the bearish outside bar pattern, perfect pattern here. And this is the break bar, this one. So in the when the market structure is a very strong, so break bar basically in the strong trendy downtrend market, it also act as a sign of continuation. But if POC exactly at the break bar point is the POC is high, so if we want to place our trade to the next candlestick, in the next candlestick, definitely we have to place our trade exactly from POC point or above POC point, not immediately. But if this type of situation happen and this candlestick volume high exactly at the push bar or pushing in direction exactly at the open price or wicks here or little below here, then we can take our trade immediately. But if this candlestick is a strong body candlestick, we have to find out the previous level breakout happen or not. If previous level breakout happen, we must follow that level. We will place our trade above that level to the direction of the trend, downward direction. But in the case of this situation, this is the break bar, so volume high exactly at that point, so we have to place our trade above that POC point to the downward direction. That will give us a very, very perfect entry point as well as very, very high winning ratio also. Okay. Okay, here bearish engulfing pattern. Yes, it's the bearish engulfing pattern below resistance level. That is the perfect situation. If the previous market condition is a very, very strong market condition by the seller side, it's a downtrend market. After this pullback, sellers again entered in the market from this resistance level. Now we have to observe the internal condition of this candlestick as well as this candlestick. Okay, so this is a pushing this one. Okay, this candlestick and this candlestick. Okay, this one, this looking like a push bar. Okay, first candle, this one, it's a push bar. Okay, next candle up. Yes, it's okay. But when we see this candlestick, this is the pushing in direction. So although it's a pushing in direction, immediately there is a round number level. That's why this pushing in direction will not work. Basically, push bar and pushing in direction at the retracement area, it will fail most of the time. Okay, it may in the uptrend market or it may in the downtrend market. So when we see this type of situation happen exactly here, so in the next candlestick, we must follow the previous point, this point here. We have to just place our trade above that level to the downward direction, because POC is below, little below. So this will if this candlestick in the downtrend market, if this candlestick exactly close below resistance level and POC is here, this POC will not work. Okay, this POC will not work. That means if you think that, so this is my POC, okay, and this is a bullish candlestick, although there is a level. So when this candlestick came here for rejection, I can place my trade here to the upward direction. That is a very, very wrong decision, wrong idea. Okay.
Yes.
It totally opposite situation, because we must follow the trend. We must follow trend. Otherwise,
right,
our winning ratio will low winning ratio. When the downtrend market happen, see, this is the perfect example. When this is a POC here, if it's really work, what happened? This candlestick got rejected and it closed above this level, above this area here.
yes,
Bearish candlestick, it's okay, but body will very short. Otherwise, what happened? Sellers, when came here, it got rejected. After rejection, what happened? Next candlestick directly goes up like this. From this point, a lot like that. From that point, the starting point got rejected and market goes up, and that will the rejection here to here. But it will not work. So when the POC will perfectly work, when it will not work, we have to identify that situation based on trend only. Otherwise, it's not a perfect setup. It will not give us any perfect result. So when we set this POC concept in the downtrend market or uptrend market based on trend, that will give us very, very high winning ratio. And we will not go against any trend. If we go against any trend, this type of loss will happen. If we place our trade here, this candlestick break this level, break this area, POC area, and close below here, and it will give us loss. So we must follow the trend. When the trend is a downtrend market, so based on the trend, we have to place our trade to the direction of the trend. So if we want to place our trade, this is my POC. How we place our trade? Definitely we have to observe where is the previous level. That means this one. So when it's a round number level and market got rejected from here, so when breakout, when this candlestick close above, this candlestick exactly touch this level or go little above, we can just place our trade here to the downward direction. Market definitely fall down. Okay. Okay, POC round number level with bearish engulfing pattern. Next candle will be red candle following the, yes, exactly. You mentioned this one, that following the downtrend, you must follow the trend here. You must follow the trend here. If you follow the POC, that will give you opposite result. That means breakout happen and market fall. Even if the POC volume is more than 80 or 90, so that will also fade. It will not work because of trend. Because of trend. Okay. Okay, I think completed. So we will learn today a new concept, that is the how we analyze a ranging situation and which type of range we have to analyze perfectly, and which type of range we can take and we can analyze based on delta river And that will give us a very, very perfect data, what may happen, what will be the next market direction, we can easily understand. So how? Suppose okay, suppose this is a basement of any market, and from that basement market is going up from here. Okay, so if market again started to create any ranging situation suddenly, so two things we must follow. This is the range. From that range, buyers entered in the market very strongly and going up. Suddenly what happened? Market trying to create another range here. Like this. So now we become confused what may happen. This is a support. This is looking like a double top pattern. Market fall down like this, or market goes up. So in this type of situation, we have to follow two things. One is the total market structure. So what's the structure of previous market? If the market is like this type of, and here now range, that is totally different. In this type of market condition, that is totally different. That means the total market condition is a sideways market. So we can't expect here any aggressive movements suddenly. It may go for long range like this type of. So this is one. And another is, if we see there is no any that type of situation, that type of ranging situation, just previously it was like this type of downtrend market, it came to any buyer's entry point area, after came back to that area, it's trying to make another ranging situation, and then market start going up very strongly, and suddenly market trying to create another ranging type situation here. So in this type of case, we must count this powerful situation here, this buyer's strongness. So, but in our previous situation, that was, although it's looking like a strong situation, but there are so many reversal above here because of sideways situation. Again, market came here. So this is momentum. Another momentum we can got here to here. Market may again fall down by creating another momentum. Another again goes up, again fall down like this. So that type of situation we will face in this sideways type situation. But if we see there is no sideways type situation, thus it's a previously it was a downtrend market. When market came here, exactly at that area, and market trying to create a short ranging situation, we have to search for any chart pattern here. Is there any pattern here or not, or trend reversal setup? And then it's a very, very aggressive movement here by the buyer side. So in this case, we just follow these rules. We will not follow that these rules, today's rules, in a sideways type situation. So in a sideways type situation, the calculation totally different. But in this type of situation, it was previously downtrend market, and when market came back to any buyer's entry point area, it tried to create another short ranging situation, and then one party, that is buyers, are very, very stronger. So same thing, it may happen from any seller's entry point area or extreme seller's entry point area. So when market create that type of situation, now this is a short range. This range is a short range. So in this range, no need to be confused that it's a double top pattern. Market will continue here to the downward direction. So no need to think like that. Just we have to think oppositely. Oppositely, that means previously it was a basement, it was a range, then very strong movement, then market trying to create here another ranging type situation. Now we have to take some information from delta river, that is and every candlesticks internal data, what is happening. So if we see market already created here a support and market again came back to that support, or not came back to that support, little above, after rejection market going up. So we have to check all these candlesticks internal data. So minimum 2-3 candlesticks internal data we have to take. Okay, if it's a downtrend market, if it's an uptrend market, now market again start falling down. This is the high, this is the low, this is the lower high, and market trying to create lower low, but it failed. So when it failed, this is our first observation. When it failed, same situation happening here. This is the high, this is the low, this is the lower high, this is the lower low, and this is the low, this is the high, this is the higher low, and this is the higher high. So downtrend market situation here, uptrend market structure here. So both structures available here. Think that market is moving exactly at that point. So when market is moving exactly at that point, so these two different situations happen. It's looking like a downtrend situation, it's looking like uptrend situation here. So how we can take a decision, perfect decision, that what may happen, what will be the next market direction, so which direction we can go. So first of all, we have to observe if we become confused like this type of, in this type of situation. First of all, we have to confirm the basement first. So what's the basement? This is the basement. So exactly at that basement, is there any previous extreme buyer's entry point area here or not? This is our observation we have to observe here. Okay, then after that situation, previous market condition, yes, previous market condition, it was a very good trendy market in our left side. Okay, then already market get first, second, third, fourth, fifth wave. Okay, then sellers weaker here, it's okay. Then sellers exactly hit this buyer's entry point, it's okay. Then it's range, so everything is matching. That means each and every situation is matching. And when we see left side good, market will try to give us another situation at the right side also. So when we see after this basement, after any chart pattern, it's a very aggressive movement, we can expect it will going to give us several waves to the same direction. Okay, so after this movement, exactly at that area, when market was downtrend, at that area, we have to search for what's the condition, what was the condition here, is there any range here, or little above here, or little below here? If there is a range, more possibility market will trying to create another ranging situation here also. Okay, so after this range, after that range, previous range, market fall down. That means when market create that type of situation after this range, if any resistance breakout happen, so more possibility it will continue to the upward direction. So how we can take confirmations from delta river? This is the basic confirmation from the market structure, market movement. There is a range here in the left side. When market came here at the right side, it will going to give us another ranging situation. So that is not related to there is a common relation, but this is not direct topics of delta river, because we have to take the internal data from delta river. But this is the market structure, it's the price action. So we are taking this price action data, and when market came here, it's just looking like this type of movement, this type of scenario. So now we can take data from delta river. So which data? We have to observe the bearish candlesticks activities as well as bullish candlestick activities. So if we see week candlestick and all these candlestick, like this candlestick, this is the break bar, or this is the stop bar, this is again break bar or stop bar, stop bar or break bar, here break bar. Okay, it's not, although it's a pushing in direction of push bar. So if it's a push bar, so our expectation, next candle break this level, support level. If it failed to break this support level, this POC or this high volume at the push bar or pushing in direction, it will fail. It will not work. Why? Because of it's a sideways situation here, ranging situation here. If it's a trendy situation, then in the next candlestick we can again place our trade exactly from this POC to the downward direction. But it's not trendy situation, it's just a ranging situation. So when it's a range, so that POC concept, it will not work here perfectly. Why? Because this is a support, it's a push bar. So after push bar, our expectation breakout happen. That means support breakout happen, but it not happen. Breakout not happen. What happened? Buyer center. Why buyer center? Because of this sideways market, sellers came near to this buyers area. That's why after rejection, buyers may enter in the market. Okay, buyers entered in the market. We are getting this data that yes, buyers entered in the market. Although it's a push bar or pushing in direction, this will fail. Why fail? Because of ranging market. Okay, so and the market exactly closed very near to this support point. So when this candlestick got rejected from support point, it just create here a pattern, piercing pattern or engulfing pattern. So if we see this candlestick volume is high, POC is exactly at this point weeks or opening price, that is one confirmation. So now second one, if this situation happen, that second one, it's the POC is here and the opening price volume is high here, it's a push bar or pushing in direction. So market, more possibility that market will break this level. Okay, if it really break this level, so what may happen? Already breakout happened here, so we can expect POC is here at the open price. Okay, if POC is open exactly at the open price and all these data giving us one information that buyers are stronger because of at the opening price or at the weeks volume high by the buyer side. So when the last candlestick break all the levels, so now we can think that okay, market will going to give us another 2 or 3 waves to the same direction of the trend. So we can easily take a decision. So now when market create that type of situation with POC here, so below any resistance level, we can place our trade to the upward direction. So if there is a resistance level here, so after this candlestick, when market came here for rejection, we can just place our trade exactly below this level or exactly at this point to the upward direction. Market will again continue, or if sellers entered in the market, at least it will create this size sellers with this type of rejection. So that time we also win this trade because we are placing our trade by taking margin of safety here. Okay, so when we are getting this data from this range, so that will continue the market to the same direction of the trend. It will not reverse the market. So any ranging situation, suppose after this situation, market came back to this seller entry point area, extreme seller entry point area. Okay, extreme seller entry point area. So when extreme seller entry point area, it doesn't mean that market reverse 100% time again and again. So we have to follow some rules. Okay, now market moving in between this area, after range, market break this level. Okay, so when breakout happen, that means buyers are stronger. So we have to take data. What type of candlestick this one? Push bar, pushing in direction, break bar, which type of? So if we see it's a push bar, now we will not take a decision immediately because of this extreme seller entry point area. We will not take a decision like this type of. This scenario is totally different. This extreme area scenario totally different because it's the first movement, very strong. After the second movement, this one, then we can trust. But we will not trust this situation here because it's a little long type range. We will get exactly at the extreme seller entry point area. After breakout, if we want to place our trade here, immediately below this level here to the upward direction, market will create here a very strong bearish candlestick here like this, and it will give us loss. Okay, so now we have to carefully observe the bearish candlestick structure, bearish candlestick movement, bearish candlesticks body size and the volume. Okay, so if we see market create this size candlestick, that is a very weak candlestick here by the seller side, and this candlestick is a stop bar. So when it's a stop bar, so now this is one data that yes, market may go up now, but it's not confirmed till now. So it's now a stop bar. Okay, so now buyers again entered in the market. If buyers again entered in the market and it after rejection market goes up, it create like Marubozu type candlestick or Marubozu candlestick or a strong candlestick, and it break the new seller's entry point area here. So that is a perfect situation. And another situation is this is a push bar or pushing in direction. So when it's a short range, then we can take decision immediately. But when it's a long range and it's extreme seller's entry point area and market already created several waves by the buyer side to the upward direction, that's why we have to just already several waves market already created, and then it came back to extreme seller's entry point area. That's why we have to carefully observe from this extreme seller's entry point area, sellers didn't enter. So instead of sellers, buyers entered in the market strongly, and it's a POC is exactly below or exactly at the wicks. So market will not reverse from that area. Sellers are not interested from that area to go down. That's why it's just create here a retracement candlestick. After that, buyers again entered in the market. It's a confirmation candle, and based on this situation, we can take a decision that market will again goes up. Okay, so if market give us this decision or this confirmation, so now from which point we have to place our trade? Just already market created several waves here. Just we have to search where is our extreme seller's entry point area. That means extreme resistance level. If we see extreme resistance level is a very near, so after this candlestick or after creating another candlestick, market may directly fall down. And if we see extreme seller's entry point area far away from that area, from that breakout point, so we can expect that market will continue to that extreme seller's entry point area. Then we have to set all of our level drawing, and we have to search for volume data, internal data, exactly the support point by the seller side. So if we get any support, exactly any support point, sellers are weak and sellers create a stop bar, that means buyers will again enter. So we can expect, and we can expect another 2 or 3 waves to the direction of the trend in the case of when market we will not get any extreme seller's entry point area then. And if we see extreme seller's entry point area, then market will fall down immediately. So this is called the short range analysis by Delta River after a basement or after any momentum situation. This is one and this is another. So when market came to any extreme seller's entry point area, we have to just wait and observe the total market condition and the behavior, buyers and sellers behavior. If sellers weak, then buyers are strong, and it creating push bar or pushing in direction. That means we have to think that market may continue to the direction of the trend more up till market hit any extreme seller's entry point area. So that is called the range analysis by Delta River. So just try to understand here. Okay, can you see my screen?
No, sir, it is showing notepad. Now it is, now I can see.
Okay. So previous market was uptrend market. So market trying to create here a downtrend movement or ranging situation here to here, this area.
Yes.
So in between this area, so if we think that, okay, what may happen, market will create down movement here or market again goes up. So we have to take a data, internal data from that situation. So when we observe each and every candlestick, so this one, this is looking like a stop bar. This is the a stop bar by the buyer side. This is the stop bar by the seller side.
Yes,
So
sir.
now this is the push bar. This one, push bar to the downward direction. But this push bar, after this push bar, why this buyer centered in the market? Do you have any idea?
This by these sellers have failed to.
The sellers exactly close at the buyer's area and POC.
Okay.
See this one. Okay, POC.
Yes.
And it's not a strong downtrend market. It's a ranging market. Sellers, again buyers, again sellers, again buyers, again sellers, again buyers. So this is the ranging market, not it's a
Yes.
sideways market, little range, short range. So not a strong downtrend here. That's why this candlestick, so this candlestick is a push bar. So I was talking about this push bar will not work
Yes.
because of this ranging situation, because of this POC. Market exactly closed at the POC, at the support level, and this volume high exactly here. That's why buyer sector. So now it's looking like a break bar. Okay, now it's a 50% chance market may fall down or goes up. So here goes up, it's a stop bar. So when it's a stop bar and this is a seller's entry point area, it's a stop bar. So sellers may enter in the market from here. But what happened?
Yes.
Buyers entered in the market. And when buyers entered in the market, and this candlestick is a strong candlestick, breakout happened, all the previous level breakout happened, and see this candlestick volume. It's a push bar.
Push
So
bar.
when it's a push bar, now this will not reverse the market, this will continue the market to the upward direction.
So when it is push bar, we can directly take trade for next candle, na? We will
Yes,
not trade.
yes. Because of this area, this is not extreme seller entry point area. This is minor area. This is a short range. That's why we can place our trade here to the upward direction. So this is the topics for today. So try to practice on it. Thanks
Yes.
for joining today's session. Now I'm going to close today's session here.